So you've pinched your pennies and or partner with investors, and you have now $50,000. You're ready to invest in real estate. Congratulations. Now the big question becomes, what market is going to give you the best return? Where should you invest? Locally, long distance? Well, think of this analysis like a big funnel, starting broadly at the top with all of the markets in America or worldwide. Now, I'm going to walk you through how to narrow that funnel down a little bit to 5 that I want to point out today that could give you an amazing return. So let's do some quick math. This video is about having $50,000 to invest. After closing costs, let's say like $5,000, and setting aside money for reserves or maybe a little bit of rehab, let's again say $5,000, you've basically got $40,000 for your down payment. Now, while there are definitely exceptions, we're going to assume for right now that you're looking to make a standard 20% down payment, which basically has us looking to invest in properties with values of under $200,000. So we're looking at 5 markets today under $200,000 that could give you a great return. I mean, that weeds out a ton of markets that don't meet that criteria. Next, we want to look at markets that have strong rental and property appreciation growth. Now, thanks to BiggerPockets Insights, all of this information is at your fingertips, so you won't have to dig for that data. Check that out for sure at biggerpockets.com/insights. As a result, now we can narrow the rest of the markets down to 5 that have proven consistent increases in rent year over year. The 3-year compound annual growth rate, it's a fancy metric known as CAGR, of nearly 10. Like, I'm looking for that, which means it's basically grown 10% per year. And then, of course, we're going to look at rent to price ratio. Rent to price ratio is a simple metric that looks at the percentage of the monthly rent compared to how much you bought it for. $1,000 rent divided by $100,000 is 1%. I like to get things as high as possible there. It doesn't guarantee a good deal, but it's a good indication. Now, furthermore, we're going to be looking at cash on cash return in these 5 markets. That means the percentage of your money that you get back in profit from the cash flow in the first year. If you invested $10,000 and you made back $1,000 in the first year, that's a 10% cash on cash return. Now, the mistake that most people make when they're running like analyses, and when they make underwriting, they assume the mortgage and maybe tax and insurance, but they don't account for some of the other expenses in owning rental properties, like vacancy, repairs and maintenance, property management. So the numbers that we're using today, the estimates we're using today, are based on the general regional cost of those extra expenses. I call that pure cash flow or pure cash and cash return. It means it's been through the fire, so it's been purified. So that's what the numbers we're looking at today are, an estimate of what you would likely actually receive on average during the first year in cash on cash return in these 5 markets. With that said, let's get to it. If you like this video, as I go through this, make sure you give me a little thumbs up button. It helps us reach more people. All right, counting down from 5. Our first featured market is Joliet, Illinois. Joliet's rent is relatively high at over $1,400 a month, but the expenses are also a little bit higher than average, especially the property taxes. They're crazy high. So that one comes in 5th on our list with an estimated $1,727 in annual cash flow, which is a 4.7% return on your investment. Now, next, Trenton, New Jersey is number 4, the highest annual rent of the 5 on this list, but it's also got the highest estimated expenses. So we've estimated an investor could see $2,300 per year in annual cash flow, which is a roughly 6.1% cash and cash return. Closely following Trenton is Tuscaloosa, Alabama, which will return 6.3% of your investment on average in that first year and a strong annual cash flow of $2,416. Now, Tuscaloosa has surprisingly low property taxes, but they might require hurricane insurance due to the proximity to the coast. Now, coming in second place is High Point, North Carolina. High Point offers an affordable entry point for investors. Median sale price is like $130,000. So in other words, like if you put 20% down on $130,000, it's only $26,000, well under the $40K we budgeted for the analysis. Now, property prices have appreciated an impressive 5% since 2017. Rents also look very strong for High Point, with a median rental price of almost $1,000 a month. I think it's $968. Rents have grown 11% since last year and have averaged 9% per year since 2017. So overall, our data team estimates $2,110 in annual cash flow and a return of 7%. Now, finally, let's get to our number 1 market on this list for the best markets for investing. $50,000, Palm Bay, Florida, which could give you a cash on cash return of 8.8%, which is $3,286 a year. Not too shabby for that first year investing. Now, keep in mind, everybody, this analysis is based on median and average numbers for 2020. So don't assume every deal in these markets is going to look exactly the same. It's your job as an investor to beat the average. With any market you're interested in, you got to learn everything you can about that market. Learn about the employers, home prices over the last 20 years, and much more. That will help you find specific neighborhoods and then a specific property to invest in. And to help with that, of course, don't forget to check out the new BiggerPockets Insights, the new feature built for BiggerPockets Pro members to identify those best markets, those best neighborhoods, and the best properties. Let me know in the comments below this video if you agree or if you invest in any of these markets or you have questions about what we're talking about today. And don't forget to click that little thumbs up button below the video. For BiggerPockets.com, my name is Brandon Turner, Beardy Brandon on Instagram, signing off.
Big